Okay, 85 to 90% of my assets are in a tax deferred account. I have about 400,000 in a taxable account. The conventional rule for withdrawal is taxable accounts, tax deferred, and then tax exempt. If I need to withdraw 150,000 a year, I'm thinking to max out my 12% marginal tax rate, in parentheses, married filing jointly, from tax deferred, then the remainder from taxable to keep my taxes mainly in a lower tax bracket. I'm not following the conventional rule of taxable first. Is my strategy flawed?
Okay, so the first thing I would say is we actually completed the most recent arc of podcast episodes is on this idea of tax efficient distributions. Please have a listen to that because the specifically your logic's not flawed. I don't know if you've achieved the right answer, but your logic's not flawed here. Yes, the conventional wisdom is spend taxable, then tax deferred, then tax exempt. But we talk a lot about the inefficiencies of that, and that the true strategy that's the most efficient is going to be some sort of mix of spending taxable and tax deferred early on until the taxable account depletes, and then spend a blend of tax deferred and tax exempt accounts after that to control your tax bracket. So it sounds like that's what you're doing. Now you mentioned taking enough out of the tax deferred account to fill up the 12% bracket, and that would be after your 400K. Well, it's going to be kicking off some taxable income, maybe not all that much. So you might have some capacity there. But it sounds like you may have in the ballpark of $3.5 or $4 million in your tax deferred account. If you're only filling up 12% right now, you'll want to think ahead about once RMDs begin, what's that going to look like? Is that going to push you into a significantly higher tax bracket? It might speak to potentially filling up the 22% bracket right now, or at least working your way into that. So, but no, you're thinking about it the right way because you're talking about doing a blend of taxable and tax deferred accounts. I don't know if filling up the 12% bracket with tax deferred distributions is the right answer for you, but at least, yeah, that's how you want to be thinking about it. The conventional wisdom is flawed. You've understood that intuitively, and yes, you're working in the right direction there to have that blend of taxable and tax deferred. And with the taxable, it may just be the income being kicked off of the portfolio. You'll spend that first, and then you'll fill up the 12. In this case, you're filling up the 12% bracket, and then if you still needed more, I have to work through all the math of if you still needed more, then maybe you're selling some shares from the taxable account as well. You might even consider Roth conversions. I don't know if you have a Roth IRA at this point, but that would allow you to get more out of your tax deferred account than you necessarily want to spend this year because of a tax efficient approach that you're taking.
And so, Wade, and I know we did it in the last podcast, but if someone's listening in and they're thinking, wait a second, but capital gains rate is lower than income tax, why not taxable?
For like, why are we generally
Yeah.
leaning towards spending the taxable account first?
Yeah.
Because it's kicking off taxable income, unavoidable taxable income every year with interest, qualified dividends, regular dividends. Yes, it's a good place to have your tax efficient asset classes like a stock index fund, because long-term capital gains will be taxed at a lower rate and qualified dividends are taxed at a lower rate. But still, generally, because of the forced taxation every year, it works out better to spend those assets earlier on rather than later on, but not fully following the conventional wisdom because the conventional wisdom, if you have a big IRA and that's most of your assets, you're going to have a lot of years where you're just being forced to spend, where every dollar you take out is taxed as ordinary income, and that can be quite tax inefficient. That's why spreading it out more over time can be beneficial.